Hello and welcome to Market Domination. I'm Julie Hyman. That's Josh Lipton, live from our New York City headquarters. We are giving you the ultimate investing playbook to help tune out the noise and make the right moves for your money.
And here's your headline blitz, getting you up to speed 1 hour before the closing bell rings on Wall Street.
The potential outcome of a Harris victory with the Republican Senate is something that could be celebrated by this market because we know that you're not going to have some of the tax increases that would happen under a Democratic sweep for corporations, and you might not have the trade, tariff, immigration policies that the market would kind of have to digest, and also the Fed would have to digest.
Very critical to Boeing as they want to get back to work building airplanes. It's how they generate cash and get themselves out of this heavily indebted position and loss-making position. So our calculations are that this agreement probably adds about $1 billion in annual cost to the company.
This will be acceleration in the growth, not just in the core government market, but in this new growth market of U.S. commercial, 54% growth in U.S. commercial. That's the expansion market, and we're early days there. Certainly anything can happen, and results could be more choppy. But what you're seeing is them expanding into that new commercial U.S. commercial market.
We got 1 hour to go until the market closes on this election day here in the United States. We don't know if we will get a definitive answer on who's going to be the next president, by midnight tonight even, but certainly market participants have been watching the outcome, not only of the presidential race, but of the congressional races very, very closely. Josh, yesterday we talked about little changed. Interestingly, today we are seeing a rally across the board in markets. The Dow up 338 points, about 0.75%. The S&P up nearly 1%, and the Nasdaq up 1.2%.
Yeah, so voting underway, as you point out. Kind of anybody's guess how this goes right now, but you do have green across your screen right now. Ryan Dietrich, friend of the show, does point out a little bit of history. If you look, he says, at how stocks typically do on election days, it's pretty good overall. And that's what you're seeing here again today.
Yeah, that is what you're saying. I want to look across other asset classes too. We've got volatility, that's the VVIX. Just looking at the VIX here, we're seeing a drop in volatility, but still around 20, which is sort of historically a little bit of an elevated level. We've got the 10-year yield coming down a little bit, a hair in today's session. The dollar is going to be in focus, folks, after the election as people are trying to pore over the results because former President Trump's more sort of tariff-forward stance, in times more aggressive stance towards other nations, has had implications for the dollar versus other currencies in the past. And of course, we got Bitcoin too. Bitcoin, which has been trending higher here, now taking a leg downward.
Well, lost a little bit of steam there. Well,
yeah.
Fortunately for us, we have just the man to talk to about all this. With Election Day finally here, Americans across the nation heading to the polls to cast their votes on who will become the next U.S. president. The race between Donald Trump and Kamala Harris now in the final stretch as the 2024 campaign comes to an end. And Yahoo Finance's Ben Worschel joins us now with the very latest. Ben.
Hey guys, yeah, so I'm watching the betting markets really closely, and we've seen a little bit of action there today. I'm on Kalshi right now. Kalshi is one of the markets that's allows U.S. citizens to vote, and right now it's at 57% for Donald Trump, 43% for Kamala Harris. Polymarket's another one that's popular. It's for overseas investors. That's 62% for Donald Trump, 38% for Kamala Harris. That's not as they're not calling the race. That's the big caveat to say here. This is 6 in 10 voters. This means that if you run this election 10 times, Trump wins 6 times, Harris wins 4 times. So this is definitely not calling the race. And then the election models have it even closer. They have it at a literal 50-50 race. Nate Silver has run 80,000 simulations of the election, and he came up with 40,015 for Kamala Harris. So really right down the middle. He points out that's literally closer than a coin flip, which actually isn't exactly 50-50.
Now, I know you're watching also the congressional, the question is not just who's going to win the presidency, who, are we going to see a control switch of the House or the Senate? Any more clarity when it comes to that? There isn't necessarily.
There's not a
right?
lot. Yeah, the Senate, the assumption right now is that the Senate is leaning Republican. There's a couple races that if they get called, Montana's a big one. If John Tester, who's the senator there, loses, it's a really uphill climb for Democrats there. That means Republicans could be in control of the Senate. And then the House right now is a real toss-up. It's assumed it goes the same way as the presidential race. So that's up in the air. The thing that experts will tell you is that a split control of Congress really limits whoever is the president next year. So if it's a Democratic House and a Republican Senate, Trump or Harris, whoever it is, their options, at least on Capitol Hill, are much limited.
And Ben, you're writing about sort of last-minute promises Trump has made. Walk us through that.
Yeah, so usually I cover economic policy closely, and usually this is the week where I'm struggling to find something to write about. It's not this week. Donald Trump at a rally in Raleigh yesterday. It's the last full day of campaigning. He announced a new tariff policy. He wants to do between 25 and 100% tariffs on Mexico, blanket tariffs all across. This goes in addition to 60% tariffs on China, 10% tariffs on across the world, and other tariffs he's promised. So it's kind of an example of Trump. Every chance he gets, literally, to double down on tariffs, he does it. He takes it. He goes for it bigger. So he's kind of signaling what he wants to do on tariffs, and he wants to go big. And whether the courts let him and all these questions remains to be seen if he wins. But that's what he's signaling he wants to do.
Yeah, the self-described tariff man.
Yeah, Mr.
Back at it.
Yeah.
Thanks very much, Ben. We'll be seeing you, of course, throughout the day and throughout tomorrow, also as we react to the results. Well, for more on today's election and what Wall Street will be paying close attention to, joining us now, Matthew Axe, Evercore ISI senior strategist. So we've obviously been talking about that this is a too close to call race. We have seen the so-called sort of Trump trade come to the fore over the last couple of weeks. But in the clients that you're talking to, what are they expecting? Or are they sort of looking at the long term and trying to look past the election?
Yeah, well, thanks for having me. I think there are a few clear spots where you're going to see major differences between Trump and Harris show up quite quickly. These are areas where a president has an ability through regulatory policy to affect changes pretty significantly right off the bat. So sectors like energy, healthcare, and financials, that's where I'd expect to see it in the near term. And then if it is Trump, I think we'd be looking at big kind of structural shifts around tariffs, around immigration, which would really be big macro drivers in 2025.
Regardless of who wins, Matthew, do all roads lead to higher deficits?
Yeah, as we've done the math and kind of added up the numbers, we do think under most outcomes, the deficit is going to be higher. Today, this past fiscal year, the U.S. deficit was around 6% of GDP. That's already quite a high level. But, if you think about Harris negotiating with the Republican Senate, Trump potentially having full control, we see a lot of pressure in either of those negotiations, the way those play out, pushing towards higher deficits. And really the context for that is the expiring Trump tax cuts. This is about $4.5 trillion worth of tax cuts that expire at the end of next year. Harris has pledged to extend most of them. Trump would extend all of them. So really right out of the gate, you're starting with a pretty high tab, and then it likely only gets higher from there.
Where does it seem like people are maybe overextended in this race? In other words, where is there most potential for gyrations in the event of a surprise?
Yeah, I think one interesting area we'll be watching closely over the next couple of days is clean energy stocks. I think clearly Harris is better for clean energy, offers more clarity and certainty around the future direction of the IRA, future direction of regulation. But we also think that, we're in an environment where electricity demand is really, really high on account of demand from AI and data centers. And so I think either way, whoever wins, the next president is going to have to adopt something of an all of the above energy strategy, where really they can't afford to be picking favorites or less, favored areas of sources of energy versus less favored. We need to get as much energy as we can on the grid here, kind of in the near term. And so I do think if Trump wins, you could maybe see some sentiment going against clean energy stocks. But in the end, those stocks, especially solar, may continue to see strong growth over the next several years, as they have over the last few.
And Matthew, there's this view out there, I'm sure you've heard it, that Trump would offer more positive regulatory environment, regulatory backdrop. And, some analysts who believe that say, that's why they think Trump, might be a positive for big tech, mega cap tech. Do you agree with that? You buy that line of reasoning?
Yeah, I mean, when we look at it, I think we see a few clear areas where Trump, if he won right off the bat, could take regulatory actions that impact specific sectors. I think the clearest example would be actually be in financial regulation, where he'd pretty clearly be able to put his stamp on things like bank capital, things like consumer financial protection. So that's sort of the first area I would look. Certainly, I think if Trump wins, you're going to see an easier environment for M&A overall. You may, as you suggested, see less scrutiny on big tech platforms that have faced a lot of antitrust scrutiny under the Biden-Harris administration. And then also, I think another area that folks talk about is energy. Trump has talked a lot about trying to do stuff for oil and gas. I think we see that as continuing to be more of a global market. So maybe there are things Trump can do in terms of regulations on the margins to help oil and gas. But overall, we see that, I think, being really dominated by the global market and global market forces.
And then when it comes to sort of macro as well, whether we talk about tariffs or things like what Trump has proposed on immigration, on the immigration front specifically, there has been some economist talk about that creating a knock to GDP. But if you're trying to sort of trade that, I don't know if there's a way to do that or how you view that as being important then in terms of the read-through for the markets.
Yeah, it's a great question. I mean, I think what it means is certainly less potential output in the U.S. Coming from a smaller labor force, slower growth in 2025. And I think you would need to kind of flow that through to how you thought about the deficit, how you thought about interest rates. So it's definitely a macro area. Certainly, if he did kind of key in on restricting immigration in certain industries, agriculture, maybe also the tech sector, if you're looking at high-skilled immigration, there could be some sector-specific impacts there as well.
Matthew, great to have you on the show. Thanks for joining us.
Thanks for having me.
Trump media and technology shares have continued their wild ride right up to Election Day, of course. And joining us now with more is Yahoo Finance's Alexandra Canal. Allie.
Hi, and what a time to be talking about DJT shares, because just moments ago, we saw shares halted several times due to volatility. If you pull up an intraday chart, you'll see that the stock declined quite significantly. It was halted twice due to that volatility. We were up as much as 15% earlier in the session, but you can see that dip that we saw around here. We seem to be recovering somewhat, but still pretty significant shift here. There doesn't seem to be a catalyst, which is often the case for DJT. That being said, if we zoom out and look at a 6-month chart, we did hit lows in the stock around September. So we have more than double that. Where shares are trading at right now gives the company a market cap of right around $7 billion. Trump is a majority owner. He owns about 60% of the company. So that means his ownership stake is worth more than $4 billion. But this is a company that's just, you see, kind of oscillates between these highs and lows. A lot of it has been tied to Trump's chances of winning the presidential election. Recently, we saw that markets, especially betting markets, were favoring the former president. But then last week, we saw the stock suffer its worst percentage decline. So if we want to pull up maybe a 5-day chart to sort of show how we see these levels kind of teeter and change as those betting odds and betting markets come in. Now, though, you know, we pretty much are in a dead heat of who's going to win this election. Kamala Harris, the former president. So this is all something that we're going to continue to watch. But I have heard from experts I've spoken with that if Trump does lose tonight, DJT shares, it could potentially go to $0. So a stock that we have our eye on, a meme stock, but very important in this current Trump trade market nonetheless.
All right. Thank you, Alexandra. Appreciate it. Stocks trading higher today as investors await the election results. For more on what this presidential race means for markets moving forward, let's welcome in now Jay Hatfield, Infrastructure Capital Advisors CEO. Jay, it is great to see you. So listen, it's the big day. It's finally here, Jay. Voting is underway. We'll start here, Jay. Who, in your opinion, is better for the stock market? Is it Trump or Harris?
Thanks, Josh and Julie. It's great to be on. Well, we actually have a differentiated view, which is that it really doesn't matter that much unless there's a sweep by one side or the other. I think these Trump trades, the Harris trades are overdone. A good example is when Joe Biden was elected. Obviously, that must be great for solar stocks. They were at the time going to get rid of hydrocarbons in short order, but yet solar stocks are down 66% since Biden was president. So we think generally these trades are overdone, with the one exception that major changes in corporate tax rates can be great or horrific for markets. And that's why what we're going to be focused on is really the Senate. We don't think the presidential election will be known for sure until the weekend, which would be terrible for the markets. But if we get results from Montana, Ohio, West Virginia, those are all not battleground states. Those are solid Trump territory. And if it looks like those are going to the Republicans, then that means almost certainly they will win the Senate, which will create stability and probably a rally in the stock market if that in fact does happen.
So that's interesting, Jay. So you think that could happen even if we don't yet know who has won the presidential?
Absolutely, because just keep in mind that, we look at the betting odds only for short-term direction, not the absolute outcome. We don't think bettors know any more than we do. They're not all knowing. They don't have better polls. And you can't poll turnout. And we do have a huge gender gap. Reproductive rights was an issue last time. So we don't think it's knowable on the House or the presidential. But the Senate's completely different. It's almost unprecedented advantage to the Republicans. And it's in states that aren't driven as much by turnout. They're not swing states. So you could very well get this Senate locked up, which would create stability in the markets and probably spark a rally. And that's why we increased our target, not for this year, but for next year, established our target really at 6,600, just to tell people, even though the market's expensive, we still think you should stay long through the end of the year.
Do you think, Jay, there's just a possibility that we overstate the importance of the election? At the end of the day, what really actually matters, it's how healthy the underlying economy is. What does corporate profit growth look like in the quarters ahead?
Absolutely, and everybody doesn't really seem to want to talk about it, but Fed policy matters a lot more than who's president. Of course, the president does nominate the Fed. So for instance, this is controversial, but we think almost all the inflation during the Biden administration came from a overly aggressive Fed. So the president gets blamed for what the Fed does when the Fed creates a recession or inflation, but it didn't have that much to do with it because they are independent. They did nominate whoever's in charge, possibly. But so in general, it's what people do, but it's not necessarily rational.
Of course, it's not necessarily rational, but there are potentially some policies of either candidate in this case, depending, as you say, on the composition of Congress, that could have an effect on the economy. Again, it's all theoretical, as we know, Jay, but the folks over at Oxford Economics looked at the various GDP scenarios, GDP growth scenarios, based on what the candidates have said. And it looks like their estimate is that under a President Trump in a divided government, the economy could potentially grow the most going out to, I guess, the furthest out. If you go out to 2028, they see the worst scenario under what they call a limited Trump scenario, where he enacts a lot of his policies, including things like tariffs, including some of the immigration changes that he has talked about. So how do you think about this? Or do you think that it's too difficult to tell what actually happens, given the gulf sometimes between what candidates say and the reality?
Well, this also will be controversial, but we think the stock market might be better off, assuming divided government, with a Harris presidency. Because you have to keep in mind that in the midterms, in 2 years, if Trump is president, then there'll probably be a Democratic sweep of the Senate and the House. So the long-term stability is equally important. And sort of half Trump could be negative. So if you just get the tariff increases but don't get a corporate tax cut or a personal tax cut, then that would be negative. We think people misanalyze the tariffs because they assume the money just goes into the ether. You have to say, well, what are you going to do with the money? Are you going to pay down the deficit, reduce the deficit, going to cut corporate taxes, going to cut personal taxes? But Trump won't have any ability to do any of that unless they take the House as well, which is problematic. So, like I said, counterintuitive, we're pro-market capitalists, and I don't, Harris isn't, or at least the Democratic Party certainly isn't, but we would think it might be better for the stock market to have Harris president if we have divided government.
Jay, I'm just curious, as you know, a true tested market pro, how closely, Jay, if at all, do you follow those betting markets? I asked, we had the CEO of Kalshi on the show yesterday, which was a super interesting chat. Do you follow the betting markets, Jay? Is it the traditional polls, both?
Well, that's a great question, and I'll tell you exactly a perfect example is that during the debate, my own view was that Trump is doing horribly, but we all have our own political outlooks. So I tried to get an objective view. Of course, the commentators haven't started commentating yet. So I went on election betting odds, which updates every couple minutes from all the websites. And it showed Kamala first after halfway through the debate being equal, and then after it being ahead. And so I think the betting odds are great short-term indicators of sentiment and what's going on, and they come out faster than polls. But where we disagree is on the absolute outcome. Like we agree with Nate Silver. We only ran 100,000 simulations, not 80, but we think it's a dead heat and unknowable. But you could tell that Trump did better since the debate because looking at the election odds. That doesn't mean he's going to win, but it got better after J.D. Vance, some comments from Harris offset a little bit by some recent probably poor comments for Trump's prospects. But so looking at the betting odds, so we'll be looking at the betting odds tonight to get a sense where sentiment is so that we can be objective because we all have our political biases.
Jay, always good to get your views on all of this. Look forward to catching up with you after the election, whenever we figure out what the result will be. Thanks a lot.
Yeah, thanks, Julie.
Be sure to stay locked into Yahoo Finance tonight, tomorrow, and throughout the week for full election coverage across live programming, podcasts, and digital platforms. We'll also have post-election coverage that will start an hour early tomorrow, so you can tune in starting at 8 a.m. Eastern. In the meantime, stick around. Much more market domination still to come.
Are you ready to master the markets and, dare I say, become a better leader in the process? Well, Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor or you're just starting your financial journey, we offer invaluable market insights and strategies to help boost your portfolio, build your wealth, and make you a successful investor. Now let's make some money and get a lot smarter.
I've done Yahoo Finance forever. This is a spectacular spot.
Welcome to Stocks in Translation. I'm your host, Jared Blickery.
Hello, world. I'm Ross Mack.
Hi, I'm Bob Powell, and welcome to Decoding Retirement.
Welcome to Living Not So Fabulously.
Hey, it's me, Tiffany the Budgetista, your favorite financial educator.
Welcome to Capital Gains World for a few days and everything has changed.
From Wall Street to Main Street to the C-suite, we are your daily lifeline because behind every great investor is Yahoo Finance. Join us on yahoofinance.com, the Yahoo Finance app, or wherever you get your podcasts.
It's time now for some of today's top trending tickers. You can scan the QR code below to check out the best, worst, most trafficked stocks of the session on Yahoo Finance's trending tickers page. First up, we've got Archer Daniels Midland. Those shares are sliding some 7% today as the company delivered lower than expected earnings in its third quarter preliminary results, and probably more importantly, said it's still dealing with some accounting issues that is going to cause it to change and revise its previous financial statements. So basically, the company was supposed to come out with full earnings and have an earnings call, and it canceled it and pushed back the date of the full earnings to come out.
Yeah, so we'll amend financial statements for last year and first and second quarters of 2024. No expected material impact from the revisions. You can see the stock under pressure. We did also get this kind of surprise preliminary report late yesterday. Earnings ex some items fell about 33% from a year ago. Missed estimates, cut their full year earnings outlook. They were talking about slower market demand among other variables, and you can see investors reacting.
Yeah, and the accounting problems stem from ADM is a big conglomerate, right? It's a crop trader, but it has various businesses, and those businesses do business with each other. So the accounting questions have to do with how it accounted for sales from some of its segments to other of its segments.
Right.
So we'll see what happens.
All right, moving on. Yum Brands missing estimates on top and bottom lines for the third quarter. So sales drop more than expected in Q3. Taco Bell growing, Julie. Comparable sales rose 4%, beat expectations, offering its so-called cravings box. But it looks like Pizza Hut and KFC soft.
Yeah, and it's interesting. The stock reaction positive, but some of the analysts who track the company weren't that impressed by the market seems to have judged that the Taco Bell strength offsets the other weakness. But some analysts say, well, no, actually the weakness is not great. TD Cowen's Andrew Charles, for example, says that the strength was not enough to offset the softness at KFC and Pizza Hut. So it doesn't seem like there is necessarily consensus on how great this report was.
Yeah, and there's a weakness in really across the space. You saw Restaurant Brands International, so that's the owner of Burger King, Popeyes, Tim Hortons. They actually missed sales expectations. So other names too.
Yeah.
To watch.
And then we're also looking at Cummins, the big engine maker. That stock getting a lift after it blew past Wall Street expectations on the top and bottom line here. The company also said EBITDA for the full year will be at the high end of its previously announced guidance. It looks like power system sales in particular were an area of strength for the company.
Yeah, hit a record high in today's trade, by the way. Company talked about improvements in power system, distribution segments, and what a run for the stock, by the way. It's up about 50% now this year.
Wow. Let's look at another sector as well. With politics in focus today, we're looking at how the election results could affect the healthcare industry. Our next guest says that a GOP victory might not be great for pharma. For more, we're bringing in Jared Holtz. He is healthcare equity strategist at Mizuho. And Jared, I want to talk to you also about some specifics with some GLP-1s. But first, I do want to talk to you on this election day about what you're watching in healthcare. The pharma industry, which seems to be the target of ire at times from both sides of the aisle, particularly when we're talking about prescription drug pricing. What are you watching most closely there?
Well, thanks so much for having me. I think we're in a little bit of a tricky spot. On one hand, some of the drug pricing situations or dynamics have been at least somewhat addressed or solved for with the IRA. So that's a positive. I mean, the Democrats have worked pretty tirelessly to get a plan out there that, hurts pharma more than it helps them. But on the other hand, what we don't know is what the Republican response will be. And it sounds like there could be some, measures that are even worse. And we kind of know, or we think we know, that the Trump administration, is pretty antagonistic towards large cap pharma, given some of the situations with the vaccine rollout and otherwise. So I'm just a little bit leery on owning, large cap pharma as a category over the near term, given, that sort of setup.
Jared, one of the other areas that's been a lot of focus lately has been health insurance, right? We really got some sort of maybe confusing results over the course of the season from some companies that are heavily Medicare and Medicaid exposed that did not do well and saw higher costs, and other ones that seemed to manage it better. Then you throw the election talk into the mix, and the sort of antagonism that former President Trump has expressed towards the ACA. Is that also an area that you would avoid?
Not sure I would avoid it. I do think the setup for managed care is decent. I don't think there's that much downside remaining unless there's another shoe to drop. I mean, the fundamentals have been mixed at best. Obviously, it's been an incredibly volatile quarter. I do think a Trump win, in theory, should help out Medicare Advantage rates over the next few years. I think that's not anticipated, but I believe that if that were to happen, that the space trades pretty well. And alternatively, if another Democrat were to win tonight, tomorrow, et cetera, I think the downside is pretty limited in the event that does not play out, given how poorly the stocks have traded. So I see it as asymmetric. I don't think there's that much upside here, but I do think there's at least a trade for the managed care space.
Gotcha. So switching gears here, I want to talk about the other big growth story that we have seen within pharma, sort of putting the election aside, and that's the GLP-1 space. We got some interesting news out of Obesity Week, big conference at which a lot of these companies present some positive results from Viking Therapeutics pill in the GLP-1 space. AstraZeneca also had positive results. It feels like competition is heating up even more. So who do you see as the sort of winners and losers?
Yeah, I thought the Viking data was pretty good. The stock ran up a lot into it. I wrote a little bit about this yesterday, that the setup going into Obesity Week wasn't great, but I think on the surface the numbers look really outstanding for Viking, and they will be a player. I think the question is, the timing at which they can compete with Lilly and Novo. They're a couple years away. The pricing dynamics that they're going to face, the manufacturing climb, commercialization. There are just so many different variables between now and when Viking will theoretically be on the market. It gives me a little bit of pause just in terms of can you buy the stock and hold it until they finally get on the market? But I do think they will be a player. I think the unfortunate thing for Viking and a lot of the biotech companies that are trying to position themselves as a player in the market is that you're competing with the heavy hitters right out of the gate. And I think that might be, when all's said and done, is the biggest hurdle.
Well, and there's been a lot of talk about Viking maybe then being a potential M&A target. But to your point, if these other big players already have their own homegrown potential entrance into the, in terms of pills, then maybe they won't be as motivated. I mean, could you see then somebody come out of left field who doesn't have a pill in development come in and snap up Viking?
Yeah, I think that's the most likely scenario. I don't think Lilly or Novo can come in for at least what investors or the government agencies would consider to be a significant asset. So I think it would most likely come from a pharmaceutical company that either is on the periphery in terms of cardiometabolic and obesity assets, or is not there at all. And investors have mentioned Johnson & Johnson, they mentioned Merck and others as potential large cap pharma companies not already in this market that could see a differentiated asset here, whether it's Viking or another company, and say, maybe this is our inroad into what's going to almost definitively be the largest therapeutic market out there.
And the demand is such that it seems like people are still having a hard time getting their hands on existing GLP-1s that are out there. We talked to the CFO of Hims & Hers yesterday, which sells compounded versions of those drugs on its platform. And he said he's still seeing a shortage. Now, this is even though the FDA has taken most of those drugs out of the technical shortage category. So what does that say to you about the dynamics in the market right now, whether these companies are going to be able to meet demand?
Yeah, I think the demand is unbelievably strong. The compounders in the third quarter, I think just by the nature of the supply chain and manufacturing, what we're able to get a decent amount of market share. Hims & Hers also benefited, as you mentioned. But as we move forward, just given all the investment, I think that between Novo Nordisk and Eli Lilly, just the two of those companies this year, they've invested close to $25 billion in manufacturing. I don't think there's really any company out there that can compete with that, at least over the near term. And so when you do all the math, the demand is still off the charts, but obviously people are trying to get cheaper versions and, work around the system. Not incredibly easy to get a prescription if you're not medically obese. So there are a lot of different variables and dynamics here that are shifting around, I think, too quickly to have a strong call. But I think, bottom line is that the demand is still definitely there.
What about a strong call, though, Jared, on which stock is the best bet in this space right now? Would it be something like a Viking that's an up-and-comer, or do you still like, a Novo or a Lilly, which have obviously had big runs?
Yeah, I think it's difficult. Novo and Lilly have been just monster stocks. Novo less so, especially recently, given some of the issues with, market share versus Eli Lilly and some of, the setbacks that they faced in the oral obesity market with some of their clinical trials. But I still think both of them are good stocks to own. CagriSema data coming up for Novo Nordisk, which should be a better version of semaglutide, the key drug for Ozempic and Wegovy. And then you've got orforglipron, which is the oral obesity data for Eli Lilly sometime in the first quarter, I think. So there are still definitely catalysts to play. I do like Viking. The only drawback that I see is that I think there are a lot of investors playing the stock purely from an M&A standpoint, and I'm not sure that this is a takeout over the short term. Maybe eventually.
Interesting stuff. Jared, thank you so much for your perspective. Appreciate it.
Thanks so much for having me.
Be sure to save the date for the 2024 Yahoo Finance Invest Conference. It's next Tuesday, November 12th, starting at 8:30 a.m. And that event will feature some of the best and brightest minds across various industries, all under one roof. You don't want to miss those conversations, so stay tuned for that. And in the meantime, more market domination still to come.
Are you a passionate investing bull? Maybe you love scooping up shares of NVIDIA on every single dip because, well, AI is changing the game. Fascinated by PE ratios and how the presidential election outcome may impact them? Then come one and come all to the 2024 Invest Conference. Huge power players all under one roof. Thought-provoking discussions on November 12th at Sept in New York City. We can't wait to welcome you to Invest 2024 live, Yahoo Finance all day.
Time now for more of the day's trending tickers. We're looking at Ferrari, those shares sliding after the Italian luxury automaker reporting third quarter results. Deliveries slumping compared to a year ago. And Yahoo Finance's Praz Subramanian joining us here to discuss. Praz.
Yeah, it wasn't a bad quarter from a results point of view, in line for revenue and profit, but it was those deliveries down 2% globally, but over 20% in China, kind of again showing the problems the European automakers are facing in China. But if you're Ferrari, they only have about 8% of their business there. It's not so much, so they can kind of, they're not so exposed to that region. And they have the prestige and sort of the mystique of the brand where they can sell kind of $3 million cars anywhere. But again, it highlights what's happening with the European automakers. Ferrari stock actually was up 40% before this day's move. So not a bad day here for them. I mean, not a bad year for them. Maybe a sell the news event for that company, but again, highlighting some problems in Asia.
Yeah, I know you mentioned some of the other European luxury automakers that are having more problems. Is it because more of higher percentage of their sales come from China?
Exactly. So Porsche, 25% of the sales stem from China last year, and they lost 30% of that this year. Mercedes, 37% of sales, unit sales, that is, in the region. So these are huge, sort of make a big sort of markets for them, and for them to suffer there right now is a big problem. We're seeing that right now with a lot of these German automakers.
For Ferrari, which models were kind of working in the quarter?
So, they're the Puro Sangue SUV, which is it's a $400,000 SUV. I mean, that's a moderately priced car. The 298 GTV, which is like their sports car, selling very, very well. And they have a couple of the hyper cars, like the Daytona SP3.
The supercar.
Yeah, $3-4 million car. Increased allocations for that car. They're selling well. If you have the money, and if you are a Ferrari client, they will sell it to you. But you and I can't just walk in tonight and buy a car. We have to actually be Ferrari clients.
What price range is the car they sell the most of?
So it's probably the 296 or the Puro Sangue, which they only sell around 10,000 cars a year, right? So it's not that much.
10,000 overall.
Overall for the entire world. So it's not that much, and you're talking a few thousand cars here and there. The U.S. being probably the biggest market for them, and then also Europe, and then also the rest of Asia aside from China is actually pretty big too.
All right, Praz, thank you, buddy. Appreciate it. Moving on, AstraZeneca shares, let's check those out. They are falling amid rising concern over a Chinese probe into the UK drug maker. So that was the story here, the headline, Julie. So under pressure, and it sounds like growing concern over a Chinese probe into the drug maker. I did see reports that traders apparently were kind of looking at these wire services headlines that spooked folks. Bloomberg has previously reported that Astra's local president under investigation, cooperating authorities. Apparently that investigation is kind of focused on aggressive sales tactics, but this headline didn't help.
No, it didn't. And, AstraZeneca had seen success in China. In fact, again, according to that Bloomberg reporting, has been seen as one of the success stories within the drug industry in China, had close ties with the leadership there. And so this seems to be quite a switch for the company, and that's why, again, this hasn't been confirmed. It's not clear exactly what's going on, but sales growth in that nation has already slowed down quite considerably after some policy changes that China has made.
The company did tell Bloomberg it does not comment on speculative media reports, that it would fully cooperate with Chinese authorities if requested.
And then we're watching a couple of chemical companies reporting their earnings and then moving in opposite directions. Celanese and DuPont both had third quarter numbers today. Celanese, the worst performing stock in the S&P 500 today, down almost 26%, its biggest drop since 2008. The company's fourth quarter forecast was below analyst estimates. The company talked about severely constrained demand. One analyst over at Morgan Stanley said they're at the bottom of the chemical cycle, but it's going to be some time, they say, before the market will want to price in mid-teens earnings per share power again.
Yeah, now on the other hand, DuPont, I saw climbing today. Chemical maker beats expectations for Q3 earnings. It raised guidance. Citi saying this was a solid beat, talking about how electronics recovery, sequential improvement in water, restructuring benefits continue to point, they told clients, to a positive 2025 earnings trajectory.
And by the way, it's not just today that these stocks are going in the opposite directions. The year they've done so as well. Celanese, including today's drop, is down about 40%, and DuPont on the year, including today's gain, is up around 14% or so.
There you go. Oh, well, coming up, we are taking a look at the best ways to be positioned among the sports betting stocks with today's Investor Playbook. Stay tuned. Much more market domination still to come. We are getting some big earnings from the sports betting industry in the coming days, with DraftKings reporting on Thursday. You got FanDuel parent company Flutter Entertainment on Tuesday. So how can investors take advantage of opportunities in this space? We are navigating how to play the sports betting sector with the Yahoo Finance Playbook. And joining us now is Jordan Bender, Senior Equity Research Analyst at Citizens JMP. Jordan, always great to see you and have you on the show. So got some big names in your coverage universe getting ready to report. Jordan, got DraftKings Thursday. I got FanDuel's parent on Tuesday. What does the earnings setup look like, Jordan, heading into these prints?
Josh, good to see you. Yeah, DraftKings Thursday, FanDuel on Tuesday. These are kind of the two bellwethers in the group. So, really what we've seen, I guess, quarter to date is how bad actually the NFL has started. And that's for the sports books. If you're a bettor, you've been winning a lot. We've been seeing a lot of the long dated parlays winning, which is putting more money in people's pockets and less money in the sports operators' pockets. And that's been a big topic of discussion. What we think will dominate the conversation going into earnings is, what is the financial impact what are results in 3Q, and then what will the impact be in the fourth quarter, and what does that mean in 2025 as well? So, that's kind of been the big topic of discussions, and it's been a good if you're DraftKings or FanDuel.
So that's interesting, Jordan. That's an interesting dynamic. So customer acquisition, I guess you're saying, looks positive, but also bettors are winning a lot this NFL season. Just to be clear, you have buys on both those names, though, correct?
Yeah, that's exactly what we're seeing is customer acquisition and wagering has been extremely strong, since the start of the NFL season, really in early September. So September data looks great. October, from a wagering perspective, actually looks pretty well. We expect to get more data in the coming weeks. But again, from a how much are customers winning perspective has been very weak coming from DraftKings and FanDuel. But to your point, we are buy rated. We do think that underlying fundamentals are actually very, very strong within this sector. And what we call bad game outcomes or the favorites winning, which is what we're seeing here, these are just part of the online betting ecosystem. This is what investors have to learn to trade around. And these are, in theory, one-time events. This shouldn't impact results going into whether it's November, December, or even 2025. So we think the setup for a company like DraftKings and Flutter as well into 2025 look extremely promising.
Two other names you covered, Jordan, that you like, MGM and Caesars. Now, they reported, seems like investors were underwhelmed. What happened there?
Yeah, I mean, these are the kind of the two ways traditionally to play the Las Vegas Strip. Both of those companies reported last week, and both of them sold off pretty hard. They've been underperformers over the last week, and really what we saw on the Las Vegas Strip, mainly for MGM, is in the prior year, you had a lot of VIP players show up. This year, not so much. And all it takes is 5, 6, 7 people not to show up on the extremely high end of this to result in a lot of missed either revenue or EBITDA. And the swing for MGM year over year was about $80 million didn't show up between a couple players. So, that dynamic coupled with the fourth quarter looks like a tough comp. F1 started in the prior year in Las Vegas. We have that again this year, but it's not going to be as big. The Super Bowl tough comp in the first quarter, not coming back to Las Vegas. So, we like the Las Vegas Strip. We're maybe a little bit more cautious than previously going into earnings, but we think the setup for both Caesars and MGM should be about flat to maybe slightly up in terms of earnings growth in 2025. But I'd say our view post earnings to now is maybe just a little bit more slightly hesitant on the leisure and consumer side.
Final question, Jordan. Another name, Century Casinos. Just today, you go to a buy on that name. Why the buy, Jordan? Maybe also your take just on the broader regional gaming sector.
Yeah, I think Century Casinos kind of fits into our play of how do you own regional gaming. So casinos outside of Las Vegas. It's been a tough couple of years for regional gaming companies. It's been very low growth, expenses eating away at margins. For a company like Century, we see them, they've invested a lot of CapEx in the last couple of years. That will start to pay off and they'll start to get returns in terms of EBITDA growth in the coming years. We think that it's extremely cheap, but we think it plays into this broader picture of you need to own names in regional gaming that have invested in the business, either through organic CapEx or M&A. We also like a name, Churchill Downs. That's a company that has invested in the business. It's at the top of it or the end of its investment cycle, and we expect it to reap the benefits in 25 and 26 and further grow EBITDA and earnings from here.
Jordan, always great to see you. Thanks for your time and those picks. Apple facing an EU fine, the first for the tech giant under the European Union's new digital antitrust rules for tech, according to Bloomberg, Julie.
Yeah, this report just crossing. Well, we knew that the EU and Apple had been at odds over the App Store and the pricing that Apple puts on developers to put their apps on the App Store. We don't yet know what fine or if a fine is going to be levied by the European Commission, but Bloomberg is now reporting that it will be happening. We also don't know how much it could be, although we do know that it could be 10% of global annual sales at maximum. We have, that in theory is the most that they could levy, it sounds like, on the company.
Yeah, just to bring that back to the election. I mean, you hear this different analysis. which would be better for which sector. And I have seen some analysis, that they try to make the case that that Trump would be better for big tech. And part of the reason is because they think they could see a situation where Trump uses tariff threats to try to get the EU to back down on some of this tech regulation we're seeing, which, as you can see, is just an ongoing challenge for big tech.
It is, although, again, we don't know what, it's sort of an overhang without a resolution in many of these cases. And the cases are happening in the U.S. too, by the way. It's not just happening
and which is
Europe.
another really interesting question is like.
But some of those cases originated under the Trump administration.
Completely, but it's going to be. I think it's another big question investors have. These U.S. government lawsuits. How does that change? Because personnel are going to change regardless of who moves into the White House.
Yeah.
All right. While we are wrapping up today's market domination, don't go anywhere. We've got you covered with all the election action. Following the closing bell, stay tuned for Market Domination Overtime.
There's the closing bell on Wall Street, and now it is market domination overtime. So let's start with where the major averages ended the day. Now, today's an interesting day. It's election day, and we're trying to sort of read the tea leaves here. What are market participants saying about the election? Who do they think is going to win? Are they then investing in the market based on that? Sometimes is the answer, but as we have told you time and time again, historically stocks go higher, not dependent on whether an administration is Republican or Democratic. So, take everything with a grain of salt, I guess, when it comes to those direct correlations. All of this said, stocks are higher on the day as they do historically tend to be on election days, as Josh pointed out earlier, courtesy of Ryan Dietrich. So we are seeing the Dow close out the day 1% higher, up 428 points or so. The S&P 500 up 1.25%, and the Nasdaq up 1.4%. All three major averages closing near the highs of the session. What else is moving? Small caps which are seen as being closely tied potentially to the outcome of the election. A lot of strategists have gone all in on small caps this year, and they haven't necessarily delivered. We'll see if they will before the end of the year. We are also, of course, continuing to watch what's going on with volatility, which is coming down, but still up at an elevated level. We continue to watch what's happening in the bond market as yields are coming a little bit lower. We've been talking about the US dollar. We've been talking about Bitcoin as well, which a lot of crypto proponents are supporters of former President Trump. They think he will be more friendly to the industry and offer some clarity. So we're seeing Bitcoin about 3% higher on the day. And then sector-wise today, we're seeing broad-based gains as well. Materials up the least. We've got consumer discretionary and industrials up the most. There's also been a lot of talk about what big tech, what could be the takeaways. We were just talking a moment ago about Apple potentially being fined by the European Union, according to a Bloomberg report. We don't know the size of that fine, however, but you've got large cap tech all gaining on the day, particularly the Magnificent Seven. So do with all of this information what you will, Josh Lipton, that we are seeing this rally on election day when we don't know what the outcome is going to be, and we might not know it tomorrow either.
We might not. Julie, thank you. Stocks closing this election day in the green as investors settle in to see who will shape the economy as the next president. For more on what the outcome could mean for markets, let's now welcome in Dec Malarkey, SLC Management Managing Director of Investment Strategy and Asset Allocation. Dec, it's great to have you on the show. So, one theory, Dec, is that you're seeing this obviously green across the screen today, triple-digit gain here. Is this Dec, is it about the market trying to step out a Trump winner or a Harris winner, or is it just the very fact that we are in fact going to have a winner? And listen, maybe it'll be disputed and maybe you'll get delays, but you're going to have a winner, and this giant ball of uncertainty that we have been, just incessantly discussing and debating will finally be resolved. You think that could be it, Dec?
Well, great to connect, Josh, and good to be here. It's interesting. Equities, for the most part, have ignored what's going on in the election. They've pretty much looked through to the growth outlook, which is strong, and they're looking through to their earnings. And this is, I'm talking exclusively here large cap, because small cap and mid cap are a little different story. So they're continuing to do that. And it's interesting, when you look across most asset classes, they're not showing that kind of, if you will, caution right now in terms of, spreads aren't reflecting it. However, the rate market is, and you see, the 10-year rate has moved over the last month. The volatility on rates, that's really going up because it's concerned more about the deficit and what might be happening there. But in terms of companies, to your point, they're completely ignoring it. Every sector is up today because the earnings have been very strong. So that's really what is driving this. They're just looking through to that right now. And, it could be quite different tomorrow, depending and where this goes. But that's where we are at right now.
And so, Dec, are you also just positioning based on the Federal Reserve, based on earnings, and less on what happens in Washington?
Yeah, you're absolutely right. I mean, that's how we look at it. I mean, we, of course, pay attention to what's happening in the rate market, and that has been much more influenced by it. But if you look at across equities, it has been a large cap, obviously, strong performance this year. Small cap and mid cap, just as your chart showed, have been doing as well. And that's because their earnings have been weak. However, they could benefit because they're so domestically focused. And if you've got a lot of tariffs that are coming in through a Trump administration, they might be less at risk there. But where we are right now, it's interesting that tech obviously has outperformed amazingly well this year, but so has utilities and financials. And that's, and certainly in the second half of the year, there's been that strong performance in high dividend pairs. And I think that may have been a little positioning of, well, let's be cautious here. Let's go at more domestically focused sectors in coming into this election. That was where initially I was thinking that was lining up. And that could be a little bit of the play. But broadly, equities are just looking at growth, and it's pretty good right now.
Let me ask you, Dec, I'm curious here with this election. Analysts are taking different takes here. What would work under Trump? What would work under Harris? Are there sectors that also you think might actually just kind of prove mixed?
No, there absolutely are. And energy is actually an interesting one where you look at the reflex view would be Trump will let folks, drill wherever they want, and you're going to have this uptick in volume. However, under Biden-Harris, actually, oil and gas are at a peak. They've been growing. And therefore, if you actually were to drill a lot more, you could probably hamper prices. So that's one where it's, kind of a mixed reaction there. Healthcare is another one where they're both kind of on the same page. They want to, clamp down, control pricing. Harris wouldn't have any designs to roll back the ACA, but whereas Trump would be in favor of that. So there are some sectors like that. And of course, the whole trade-off between tariffs, and that really, would impact tech in particular because they're the most multinational that you have in there. Harris wouldn't be in that camp. So it's quite mixed. And you talk about antitrust, Trump would probably be less focused on that. Harris has been neutral and in fact might be more sympathetic to big tech just because she represents California. So there's some sectors do better under one or the other, but there's many that are in that region where it's a bit of a trade-off.
And Dick, what about, you mentioned what's going on in the Treasury market as well, because and the action there has been interesting. We've been talking a lot about how the Fed is cutting and yet yields have been moving higher, and there's sort of a push and pull between fiscal and monetary policy. Who do you think wins out when it comes to how the Treasury market trades?
So this is a great question because this one it'll be interesting to see tomorrow how the 10-year reacts. Neither candidate is showing a lot of fiscal responsibility, but if you're to rank, and these have been scored independently, Trump wins out on that. He's much more going to be less friendly to the deficit, and the view is that if he ends up winning, you're going to see the 10-year bump up, maybe another 25 basis points at this point because of the concerns around the deficit. Whereas, if it's Harris and some mixed government, you could see it maybe go down a little bit or stay in the range it's in right now. But that's the Treasury market is really fixated on what's happening with the deficit and how that could continue to grow, and it's getting concerned. So that's what we're seeing come through, and we're seeing it in Treasury volatility that really ramped up in the last say month and a half as we got closer to the election. So there are concerns that are coming through the Treasury market. It's the only responsible party in some respects that's paying attention to the deficit at this point.
Bond traders are always watching. Thanks, Dick. Appreciate it. Well, as voters, thank you. As voters head to the polls, there are a litany of issues they'll be voting on, but is the economy still the top concern? Joining us now, Yahoo Finance's Rick Newman. Is it still the economy, stupid?
That's what we're going to find out. Yeah. That is the very question we're going to get answered today. My guess is yes, it is the economy. But the real question for voters is, are you okay with the economy the way it is right now? In which case you think, okay, inflation is back to normal. I don't think inflation is going to be coming back anytime soon, and I give Kamala Harris the benefit of the doubt. Or no, I think things are still terrible, and I want to go back to the Trump era with the first one when we didn't really have much inflation. So the way this has played out has been very interesting. So at the beginning,
the bobbleheads are back.
Good Halloween costume. At the beginning, voters thought Trump was better for the economy, obviously, and that especially when he was running against Biden. But when Harris, he had a huge lead against Biden on the economy, 10 points or more in polls. But when Harris came into the race, she's always smiling. She gives off pretty good vibes. And there have been some interesting surveys showing that voters increasingly trust Kamala Harris over Joe Biden on the economy, even though she's been vice president. I mean, she literally has no control at all.
What's the gap, though, between Trump and Harris on the economy?
Well, the Financial Times asks this question on a monthly basis and found that they're actually tied. I mean, that was a real head scratcher when that first happened in August.
Is that pretty much how polls have, or was that an outlier, or that's what most polls have
That was an
shown?
outlier at the beginning, but that has remained the same. They do that every month, so I think there have been two more showing that, and then other polls have shown a tightening between Kamala Harris and Donald Trump on the economy. So in a sense, that's not surprising because, the economy has definitely been improving. these last several months. I mean, inflation, I think the number is now 2.4%. That's basically in the normal zone. And I've seen some analyses saying that if voters in swing states think about inflation as a percentage, then Harris wins. And if they think about the cumulative price increases under the Obama administration, the Biden administration, then Trump wins. I mean, like, it's that close in terms of how people read this.
But there's one other very important measure that people use as a proxy for inflation that's been coming down.
Gasoline.
That's exactly right.
It's got to be gasoline.
So you
which
wonder,
is another thing. Yeah, I mean, the national average now is around 310, I think. So that's an absence of a problem.
Who's president has almost nothing to do with what the gasoline prices are.
Yeah, none of this. Yeah, but it doesn't matter around now. And then the other slight improvement is the Fed has started cutting interest rates, and that has gotten through to voters. So when you look deep in the crosstabs of like the University of Michigan Consumer Sentiment Survey, people do think interest rates are going to come down. Now, ironically, they haven't, and that's related to the 10-year and the longer rates, which are reflecting concerns about Trump winning. I mean, it's all kind of like turns back on itself at this point. We're going to get more clarity within days or a few days anyway, and see. So, Biden-Harris started at a really tough point. If you go to 2022 when inflation hit 9% and gas prices hit $5 a gallon, and since then the drift down has been everything you'd want if you're the incumbent. The question really is it good enough?
What's the Rick call here? Who wins
the Rick
this?
call is Kamala Harris is going to win.
Senate?
Senate's going to go Republican, and House is going to go turn Democrat on Harris's coattails. And I'm guessing, this is low confidence, but
who is it?
Listen,
everybody's guessing.
Yeah, exactly.
What you've seen in a couple of late-breaking polls, especially that Seltzer poll out of Iowa, is that women voters are potentially punching way over their weight because of the abortion issue, because of how they feel about Donald Trump and the way he characterizes women. And Harris could get a tailwind from higher women voter turnout than expected, or getting more fence-sitting women voters in the suburbs and other places. So I'm sensing a girl power election here.
So Joe Rogan couldn't get the guys to the polls in the same way? Is that what happened?
I'm not sure Joe Rogan, he didn't really try that hard. Elon Musk certainly did. I mean, Elon Musk has been tweeting, more men need to vote. So if it's girl power versus boy power, if women are ever going to get fired up in election, it is 2024, and we will see if that happens.
We shall. Rick, thank you, buddy. Appreciate it.
Guys.
Be sure to stay locked into Yahoo Finance tonight, tomorrow, and throughout the week for full election coverage across live programming, podcasts, and digital platforms. We'll also have post-election coverage that will start an hour early tomorrow. Tune in starting at 8 a.m. Eastern. Stick around. Much more market domination. Overtime coming up.
There is a new market cap king in the U.S. NVIDIA overtaking Apple after those shares rose a little under 3% during today's trading. Going out to more decimal places, if you take a look at the Wi-Fi Interactive, NVIDIA now at $3.431 trillion, Apple at $3.377 trillion. Of course, we also recently got the news that NVIDIA is going to be entering the Dow, Intel exiting. So that perhaps helping to put it over the little finish line there.
Yeah, I mean, listen, NVIDIA for a lot of investors is still the, they think the smart way to play the mega AI trend. I think as for Apple, they did report, revenue reached this all-time high for the September quarter. But I think there were still some questions out there for some investors. How strong is this iPhone upgrade cycle really going to be?
Yes, definitely. And we haven't heard from NVIDIA yet, so there hasn't been room for people to be disappointed.
We shall see.
By those numbers, even if they come out ahead of estimates. We'll see.
All right, well, moving on, investors, they are watching this election closely, especially when it comes to industries that could benefit based on who moves into the White House. But one person who may benefit no matter what, Elon Musk. Joining us now is Doug Clinton, Intelligent Alpha founder and CEO. Doug, it is great to see you. So let's start right there, Doug. So big election night, maybe a big night for Elon Musk. I know you and your team at Deepwater there. Doug, correct me if I'm wrong. I think you all are invested in Musk companies, Tesla, XAI. I mean, what could this election mean for Musk and his portfolio of companies that you're an investor in?
It will be a very interesting night, I think, for Elon Musk. He's obviously, Josh, made a really big bet on the election going one direction. And I think if it goes against him, if Kamala Harris is elected president, I think it probably is a negative for him. And the way we've kind of thought about it is there's Elon and then there's his companies, and they're a little bit hard to separate. But Tesla obviously is the company that I think most of the world has the most exposure to. And I actually think Tesla, in the event that the presidency doesn't go the way Elon is hoping, may actually be okay. Because with Harris, you might get a better sort of green policy. Obviously, Trump has had different comments he's made about his love for oil and traditional vehicles. So Tesla might be okay. I do think, though, that Elon would probably find himself under more pressure from the SpaceX side and the X side.
How do you think that would play out exactly, Doug?
We've seen a little bit, Julie, already in California, for example, with SpaceX and some of the launch permitting issues that they've dealt with, that I think the officials there sort of overtly said, right, that it was related to some of Elon's political activities. And so I think we could see an environment where, whether it is X, maybe it's XAI, maybe it's SpaceX, officials in different capacities might try to find ways to put up different roadblocks that just make it harder for Elon and his companies.
It's interesting, though, Doug, because you think about the Biden-Harris White House, and it would seem like they weren't big fans of Musk to begin with. You remember, I think it was the summer of 2021, they have the EV summit, and they kind of snubbed Tesla there. I mean, it just seems like if Harris won, how much of a challenge do you think that is for Musk, just trying to perhaps work on a relationship?
You would think that if that were the outcome tonight, Elon and his people would find some way to try to, mend fences and say, look, obviously it didn't go the way that we were campaigning. But we have this agenda that actually, it does very much align with some of the principles of the Democratic Party. I mean, Elon probably has done more for bringing sustainable energy into the markets, kind of into the mass markets, really, in the US and globally, than maybe anybody else in the world. And so I think his perspective on trying to make the world a more sustainable place is certainly that's well aligned, a message that's well aligned with that party. And you would have to hope that they could find a way to work together, because it hasn't really seemed to be much the case the last 3 years, to your point.
So I guess, do you, as an investor in his companies, do you consider his political activities a risk or no?
We try to separate it. And so I'll approach it from two angles. At Deepwater, we are investors in XAI, and we're big believers that there's basically 4 companies on Earth that have a chance to build the foundation models that power sort of everything. It's Meta, with Llama, it's Google with Gemini, OpenAI with GPT, and then xAI with Grok. So that investment is really built, I think, more on just what can they do from a technical perspective. And I don't think there's much regulation that we would expect that would be specific to Elon that the other players in that space wouldn't face. On the Tesla side, so Tesla's a holding, and it's been a top 15 holding in our Intelligent Livermore ETF, LIVR. And that is an ETF that is powered by AI. We use AI to make the stock picks in that fund. And the perspective from AI has been that, Tesla is an underappreciated autonomy story. It's an underappreciated AI story. And again, in that case, I think AI is just separating all of these political issues and just saying Tesla as a company has a product that people seem to love. They have optionality with autonomy. They have optionality with the robotaxi. And if Elon can get some of those things right, it should be a good catalyst for the stock.
More broadly, Doug, on this question of who's better for the stock market, Trump or Harris, we spoke to any number of strategists and analysts about that issue. What does the AI committee say about that?
It's funny, Josh. The AI committee actually said it doesn't matter. In the AI committee's opinion, at least for the next few months, the committee's view is that no matter who wins the presidency, the end of the year for the S&P, we might end up kind of where we are today. So there could be some volatility there, but AI kind of thinks that it won't be a big issue. And the reason is because if you kind of look at the policies of each candidate, AI says, look, you've got tariffs, which is probably a negative for Trump. It could be inflationary, but you do have the prospect of potentially lower corporate taxes, which was a good thing in 2016 when Trump came in. And then on the Harris side, you don't have the tariff picture. Maybe you have some more stability in terms of sort of global policy, but she wants to raise corporate taxes, which obviously would mean lower earnings and probably a headwind to markets. So AI thinks those kind of offset.
Doug, always great to see you and have you on the show, my friend. Thanks for joining us.
Thanks, Josh. Thanks, Julie.
Time now for What to Watch Wednesday, November 6th. And starting off, of course, on politics, it is election day. Voters are hitting the polls as we speak, casting votes for the U.S. presidential election between Vice President Kamala Harris and former President Donald Trump. As we wait to see who will become the 47th president of the United States, many investors will also be focusing on the House and Senate races and how the outcomes will shape the future of U.S. economic policy. Yahoo Finance's election coverage will start tomorrow at 8 a.m. Eastern.
I'll be there, Josh will be there, the gang will all be there. And taking a look at the Federal Reserve as well, lest we forget about that, the two-day FOMC meeting starts tomorrow. The Fed will be making its next interest rate decision public on Thursday. Fed Chair Jerome Powell will be holding a news conference following Thursday's decision at 2:30 p.m. Eastern. And Yahoo Finance's coverage on Thursday will begin at 2 p.m.
And on the earnings front, we're going to be getting more corporate earnings tomorrow, including Novo Nordisk, Toyota, and Qualcomm. Novo Nordisk announcing results for the third quarter. Analysts focusing on the company's weight loss drug sales in Q3 as competition in the space heats up.
That'll do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell.
But don't go anywhere. On the other side of the break, it's Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market-moving stories so you can get ahead of the themes affecting your money. Stay tuned. Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we're going to be breaking down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. And here are some of the trends we're going to be diving into. The market's closing near the highs of the day, and it was a rally across sectors, really, including crypto. Bitcoin, one of the key trades we're going to be watching as the election results come in. We've got expert analysis straight ahead. Plus, Super Microcomputer just reporting preliminary first quarter results, and the stock is sliding. Analyst reaction is coming up ahead. And beyond the presidential race, we're watching some other key races investors should be watching on issues from wages to cannabis. Now, there are a number of sectors waiting to find out the results of the presidential election to see what their future will look like, but it's possible none are watching it as closely as the crypto industry. And joining us now is Ben McMillan, IDX Advisors Chief Investment Officer. Ben, it's always good to have you on the show. So, listen, crypto clearly a theme, an important theme in this election. I'm curious, Ben, how involved were crypto corporations, crypto PACs in this election?
Yeah, I mean, the short answer is extremely involved to an extent that a lot of people don't realize. So just to put some numbers on this, crypto corporations have spent almost $120 million on elections this year, which is second only to the fossil fuels industry. So crypto came basically out of nowhere and became this force to be reckoned with. And they've had real impacts on elections. If you look at some of the big primary elections for Senate races, California and New York being two perfect examples where there were two Democrats that were very anti-crypto. And the crypto-related PACs spent, millions of dollars on actually non-crypto related ads. These were just kind of generic, anti-campaign ads, and they booted both of them. They won both of them. So the crypto dollars have emerged in a very big way. They've been very effective. And if you look at the leading the candidates' rhetoric, both Harris and Trump, it's forced a little bit of an about face. Both of them. Trump has always been a little bit more friendly to the crypto environment, but even Harris had kind of a quote unquote reset, where she kind of sat back down with the crypto community after seeing how influential these dollars were.
Ben, regardless of who moves into the White House, whether it's Trump or Harris, what should their priorities be, Ben, in your opinion, with regard to crypto?
I think the first one is, and that's an excellent question. If we go back over the last 4 years, I think you can kind of sum up crypto regulation by being, very haphazard. You've had a lot of government agencies kind of, engaging in a turf war over, who's going to control crypto, whether it's the SEC or the CFTC. Within Congress, you've had a lot of rhetoric about, crypto is only the domain of money launderers and drug dealers and things like that. None of which, is helpful. It's even beyond disingenuous. It's just ignorant at this point. We've started seeing that change a little bit, which I think is very good. You've started seeing, Congress people in general talking about crypto as a technological revolution, something that the United States has to foster, which, frankly, where we are as a country in our growth cycle, we can't be picking and choosing our spots for innovation. And crypto is a huge source of innovation. So I think to answer your question, first and foremost, we need to have regulatory clarity. I'd love to see whoever gets in the White House, issue very clear mandate for how crypto is going to be regulated going forward, putting even a roadmap in place so that it just removes a lot of this ambiguity around regulation, which has been just kind of hanging like, the sword of Damocles over the entire industry.
Let me ask you, Ben, you look at the chart of Bitcoin, very strong run this year, all-time high in March. Recently retest that high, you pull back a bit. Beyond the election, Ben, I'm curious, what do you see as the next catalyst?
Candidly, I think we've already started to see the next catalyst, which is 10-year rates backing up. So, we're of the mind that we're in the very beginning of a commodity super cycle. And with that, we think, crypto is going to continue setting all-time highs, Bitcoin in particular. It's very difficult when you look out at the original utility of Bitcoin as a store of value. It can't be printed. It's a digital store of value. And now all of a sudden, we're starting to see, market participants value that type of asset. It's been legitimized, over the years with kind of Main Street moving over. We've got the spot ETFs, which I think went a long way towards kind of legitimizing the asset class among advisors and therefore their clients. And now we're seeing the bond market kind of push back on the federal budget deficit. And I think looking forward, it's very difficult to see how Bitcoin doesn't set all-time highs next year. And I think we're well on our way to kind of six figures per Bitcoin here.
Ben, great to see you and get that analysis. Appreciate it. Be sure to save the date for the 2024 Yahoo Finance Invest Conference next Tuesday, November 12th, starting at 8:30 a.m. The event will feature some of the best and brightest minds across various industries, all under one roof. You won't want to miss those conversations. Stay tuned. More Asking for a Trend still to come.
Are you a passionate investing bull? Maybe you love scooping up shares of NVIDIA on every single dip because, well, AI is changing the game. Fascinated by PE ratios and how the presidential election outcome may impact them? Then come one and come all to the 2024 Invest Conference. Huge power players all under one roof. Thought-provoking discussions on November 12th at Sept in New York City. We can't wait to welcome you to Invest 2024 live, Yahoo Finance all day.
Supermicro computer shares sliding hard here. That's after releasing its preliminary first quarter results. Company also sharing its second quarter sales forecast, and that did miss Wall Street expectations. For more on Supermicro, I want to have Matt Bryson, Wedbush Securities SVP of Equity Research here. Matt, it is good to see you. So listen, Supermicro gave us these results. Clearly, at least initially here, Matt, investors not happy. We're down here about 10% in the after hours, but let me get your reaction.
Yeah, it's a little bit hard to say, Josh. So, I mean, there are two things going on with this report. One is, are they going to get any closer to filing or talking about exactly what the issues with their filing were and when they might those issues be resolved? And then what's the impact on numbers? So with the filing side of things, they said they've pretty much completed their internal audit, but they can't tell us when they're going to file. And then on the number side, there'd been some fear that their financial issues were going to create problems with their business. And it certainly looks like revenues aren't where they wanted them to be, either for the quarter they just reported or moving forward. At the same time, certainly I, as well as others, have been talking about the fact that business momentum seems a little bit slower. So it's just, there's a whole lot of unknown here.
There is a whole lot of unknown. I mean, the company, as you said, they say they finished their investigation here, and they found no evidence of fraud or misconduct. Now they're doing remedial measures for the company, they say, to strengthen internal governance and oversight functions. As we know, EY resigned as the auditor of the company. So what kind of faith do you think the street is going to put in this completed investigation?
I think that's part of the problem is that until we see a new auditor get appointed, until it seems like there's a clear path towards them filing numbers, I think it's going to depend upon who they choose as an auditor. Right? Is it a company comparable to EY? They replaced Deloitte & Touche with EY just last year. So is it another tier one accounting firm? And again, I just the problem is we don't know, and it doesn't look at least like we're going to get any direction. Though I guess we'll have to wait to the call to find out for sure there.
Matt, I'm curious. Are there companies, are there names that you think would be well positioned to gain, to benefit from all these troubles that Supermicro is suffering right here?
Yeah. So when you're buying an AI server, you've got choices. You can choose Dell. You can choose HP. You can choose Gigabyte in Taiwan. There's another number of companies who are providing relatively similar products. NVIDIA, particularly with the next generation of parts, the NVL72 servers based on Blackwell, they really dictate the specs. And so if I'm looking at my choices, and I've got Dell on one hand, who doesn't have a financial problem, and Supermicro on the other hand, who does, then maybe it behooves me to choose Dell.
Matt, great to have you on the show. Appreciate that instant analysis. Moving on. We're going to get another story here we want to get is Wedbush Securities Equity Research. The push from tech companies to power AI with nuclear is hitting a speed bump with the Amazon Talon deal getting hit with a rejection from the U.S. government. We're scoping out the ripple effects now for nuclear power deals. For more on this and the broader energy space, let's get to Timothy Fox, Clearview Energy Partners Managing Director. Tim, it is good to see you. I want to start with this news, Tim. U.S. regulators rejecting Amazon's efforts to tap a nuclear facility in Pennsylvania. That certainly made some headlines. Curious what you made of that, whether you were surprised by that decision, Tim.
Yes, we were surprised by that. And I think a number of people, a lot of stakeholders were as well. Ultimately, we think the FERC decision, the Federal Energy Regulatory decision, is a short-term setback for generators that wish to co-locate their load or co-locate their power with a data center, and also a setback for the data center developers. But the order may not represent a long-term risk. It's more that FERC may have punted or didn't want to set a precedent about co-location until it had firm policy. And with 3 new commissioners added to FERC, they may not have been ready to set that precedent.
And Tim, if I understand it correctly, because I don't want to go too far down, sort of getting into the weeds of these agreements, but these agreements are called power purchase agreements between these entities, between whatever AI or data center company it is and the power provider. It seems as though this is essentially a lesson in that they need to be written and formulated in a certain way in order to get past regulators, rather than maybe challenging the fundamental idea that the agreements can happen in the first place.
Yes, we would agree with that analysis. It's that FERC determined that PJM, which is the wholesale market operator along the Mid-Atlantic, did not meet what FERC calls the high burden of demonstrating the need for the key provisions within the proposed arrangement. So it's not that they said no to this type of arrangement, but they just said that no to this one right now. And again, we think it has to perhaps do with FERC not wanting to set a precedent. And in fact, one of the commissioners that voted to reject this particular agreement wrote a concurrence that said, that was very explicit that FERC, that decision did not foreclose future proposals that are very similar. So again, we think this is about FERC wanting to take its time to make sure that it has a firm grasp of what kind of policy it wants to set for co-locating data centers next to or adjacent to power plants.
Do you think, though, Tim, do you think this could mean that if big tech really wants carbon-free nuclear power, they simply have to wait until those new reactors come online?
Yeah, that's one of the big issues we've been discussing. So regulators are concerned about three things. They're concerned about reliability, taking an existing large, nuclear power plant offline. Does that create reliability risks? They're also concerned about ratepayers. Do existing ratepayers have to pay some unfair portion of the cost of upgrading the grid to accommodate a new data center? And then also the third concern is policy. Does the influx of new data centers create a concern about being able to meet state or local decarbonization policies? One of the things that we've been emphasizing to clients is the idea of BYOG. That's bring your own generation. If you're a data center and you want to, avoid some of the political risks that come with otherwise siphoning off existing capacity, if you're able to connect to a new generator rather than an existing one, you can avoid those pitfalls.
And then separately, I want to turn to the election for a moment, Tim, because I know you've been trying to analyze the potential energy policies that we could get from either a Trump or a Harris administration. And you also caution that what policies are in place and how the industry actually performs could be two very different things. Talk to us about that.
Sure. Yeah. So one of the things we've often argued is that the energy outcomes can contradict the policy landscape. And there's some great examples to this. So President Obama presided over substantial growth in oil and gas production here in the U.S., despite having explicit policies designed to promote and encourage alternative resources. President Trump was an explicit and often touted promoter of coal plants, but coal plants retired at an accelerated rate during his administration. And then finally, we have President Biden and the Democrats, through the Inflation Reduction Act, have sought to accelerate the transition to cleaner resources on the grid. But now with growing power demand, in part from data centers, all that growing power demand, it's forcing utilities and independent power producers to keep conventional generation online longer. Otherwise, you could at risk having instability on the grid.
On the grid, Tim, I've heard you talk about how what we're entering here is this new period. I think you called it the new normal. What did you mean by that?
Well, the new normal represents how for years there was largely flat and even declining load demand throughout the U.S. That to the extent there was growth in annual power demand, it was only going up by 1 or maybe even 2%. Now we're seeing it go up at twice that speed or perhaps even more. And the long-term projections are increasing significantly. So PJM, for example, issues an annual report looking at long-term load forecasts. And those are changing substantially year to year over the last 2 years than what we've seen over the previous 4 or 5. So it's not just growing load demand, but it's a higher load demand growth than they're expecting only a couple months previously.
Tim, good to see you and have you on the show. Thanks for joining us.
Thank you very much.
Millions of Americans will head out to the polls to vote in person for what is projected to be a tight presidential race. Yahoo Finance's very own Ben Werschel joins us now with more. Ben, what is the latest?
So the latest on the betting markets, it's very unchanged from what I said earlier in the show. It's 58% for Donald Trump, 62 on Kalshi, 62% for Donald Trump on Polymarket. Again, just the caveat to folks, that means if the election were run 10 times, Trump wins 6 times, Harris wins 4 times. So it's still a close race. It's still anyone's race. The models have it exactly as a toss-up.
But Ben, we want to know what
I know.
We got the call from Rick. We've been asking for calls from people. What's Ben Werschel's call for who's going to?
Well, I don't have a call for you. I'm a reporter, so I'm not going to do that. I was afraid you were going to ask. Yeah, so I'm not going to do this. So I'm going to give you the next best thing, which is a coin flip, which is literally what Nate Silver says. He says his model is closer than a coin flip at this point. So I was going to do heads for tails, heads for Harris, Trump, tails for Trump. So I'll do it real quick, and then we can move on. So it is tails. So take that for what it's worth. That's maybe as valuable as anything I'm going to say here.
Anything else that we got today?
I can tell you though when we're going to have a much better sense and when these markets are going to move, when the polls start to close. The times to watch there are first polls close at 6 p.m. here on the East Coast, and then it keeps on to the night. The action really begins at 7 p.m. The first big swing state is Georgia, and Georgia's important because it counts fast too. So it's one of the first swing states to close, and it counts fast.
So they close at 7, or we should start to get some numbers at 7? They close at 7.
Both.
Oh, okay.
Yeah, so they will close at 7 and we'll start to get to some numbers. They count some of their ballots early, so we might get a lot. 7:30, North Carolina is in a similar situation. North Carolina counts fast as well. 8 p.m. is when the big one lands, and that's Pennsylvania. The thing to know about Pennsylvania is that moves slowly. So they might count, their count might be measured in days as opposed to hours. So that could be slowly. And then we have a bunch more in the rest of the night, 9 p.m., 10 p.m. It goes all the way till 1 a.m. when the last polls close in Alaska.
And you also, Ben, you broke out 5 things you say financial observers need to watch.
Yeah.
What are they?
Yeah, exactly. So as I just laid out, where there's a lot of hours people might be looking to fill. So I laid out 5 things to do that have nothing to do with Harris and Trump. So for financial folks in particular. I'll run through them quickly. The first one is exit polls. One of the things about elections that I like, maybe I'm just a polling nerd, but you get a real sense of it's a much more deeper poll on the issues. So they're going to, when voters go to the polls, they're going to be asked what they think on a variety of issues, and we're going to get a real sense of their mood on the economy. 4 years ago, which was in the height of COVID, there was an almost exactly 50-50 split on whether the economy is good or not so good. So people were deciding on that. So how that moves will tell us a lot. Other ones to watch, crypto. Crypto, it's kind of been a little bit under the radar, but the crypto industry has invested a whole lot in the House races in particular. There's a dozen candidates that could win because of crypto money heading into their things, and they're going to definitely know that the crypto will help them out, so they're going to be much more friendly to the industry. Third one quickly is Sherrod Brown. He's the Ohio senator who's in a really tight race. It's both important for control of the Senate, but also who heads the Senate Banking Committee. So whenever you see Jamie Dimon or Brian Moynihan getting grilled by senators, it's that committee. So I can tell you that they're watching that race closely. Other one is cannabis. There's a bunch of cannabis measures. The big one is in Florida, where they're looking to. Florida's already a huge market for medical marijuana, and they're looking to expand it to recreational. So that's big for the industry, and it could change things at a national level. And then the final one, and the caveat here is this could take just as long as the presidential race, is the question of a split Congress. Experts will tell you again and again that if there's a split Congress, then it's kind of, on a lot of issues, it sort of narrows it. It doesn't really matter. It matters less whether Trump or Harris is in the White House. On taxes, if the Congress is split, they have to compromise. Whatever Trump or Harris says matters less. So those are the 5 ones to watch kind of while you're reloading, other than just reloading Pennsylvania results over and over again.
Good. We need something else to do besides that. Thanks, Ben. Appreciate it. And of course, you're going to be with us tomorrow morning.
Yeah, and we're live blogging tonight for people who can watch, and then we'll be on 8 a.m. tomorrow.
Will do. Thank you, Ben. Appreciate it. Stick around. Much more asking for a trend still to come. Taking a look now at shares of Trump media after the release of its third quarter results, and Yahoo Finance's Alexandra Canal joins us here with the very latest. Break down the numbers.
Yeah, interesting time to release these earnings, just hours ahead of when we could potentially find out who will be the next president of the United States. But we're seeing revenue decrease approximately 23% to about 2,618 for the 9 months ending September 30th. That compares to revenue of about 3,379 for the 9 months ending September 30th, 2023. So that year over year decrease there. Net loss, though, $19.25 million. That was a narrower loss on a year over year basis. But still, I mean, this is a company that is just clearly bleeding money. Combing through the release quickly here, a few things stand out. They did call out inflation, and that inflation has continued to have an impact on its business. They cited macro events like the COVID-19 pandemic, the Russian invasion of Ukraine, Israel-Hamas war, along with supply chain constraints, labor shortages, and rising interest rates as having an impact on the business, and that because of that, they eliminated several positions in March 2023 and have therefore continued to pause hiring moving forward. But it also, they call out the popularity of President Donald Trump, and the value of the brand may diminish if his popularity goes down or were to suffer. Any adverse reactions to the president or the loss of his services could adversely affect revenues. So again, this is a stock that is very closely tied to the election, tied to the former
this
president.
is the moment of truth tonight, right, for this company?
Yeah, and we have spoken with several guests on our shows that have said, you know, if he loses the election, this is a stock that could potentially go down to zero.
If he wins,
we could see some more upside potential ahead.
Is the thinking there, Allie, if he wins, this becomes his go-to platform?
Maybe.
And then he draws in eyeballs, and where eyeballs go, marketers go? Is that?
Yeah, maybe there's that. Of course, his buddy Elon Musk, he controls X, so maybe there's a sort of integration that you could do with True Social and X. And like you were saying, maybe this is his main form of communication. But again, I mean, revenue is just not doing well. They're not really pulling in much money at all, continuing to bleed money, to lose money. This isn't a company that trades on the fundamentals. It trades on the vibes and really whether or not the former president can become the new president again. And that is a big question mark heading into tonight.
How much they can attract users, eyeballs, advertisers.
Because what does True Social serve at this point, especially since Elon Musk now controls X, the censorship issues that Trump always complained about, it's not really a thing anymore. So I think that.
And reportedly, Musk and Trump actually hanging out tonight.
Oh, there you go, watching the election together.
Let's see. Thank you, Allie. Appreciate it.
Yes, of course.
That is a wrap on today's Asking for a Trend. Be sure to stick with Yahoo tonight, tomorrow, and throughout the week for full election coverage across live programming, podcasts, and digital platforms. We'll also have post-election coverage that will start an hour early tomorrow. Tune in starting at 8 a.m. Eastern. Have a great night.